So to set the scene a little bit, I think if you've been here particularly from yesterday and from today, we've gone from the very high 50,000 foot up big circular economy global infrastructure and supply chain picture, and then we're coming right down and away. In this session, we've still got the big picture, and we'll see some of that in the discussions and presentations. But we're also coming down to some of the nitty-gritty details and some of the facts. So I hope that you will chip in and make your comments and your thoughts known and ask appropriate questions. Before we start off, I'd just say a couple of things to think about is, given the rapidly changing things that we are seeing from the presentations earlier today, what infrastructure is that we actually do need in Scotland, and how do we actually achieve that? But that's just my personal thinking before we start the session. So I'll introduce the first two speakers. We have Pete Brown from Scottish Procurement, who's going to start off first, and then we have David Fraser, who's Assistant Director from Ernst & Young, and David is now based in Bristol, but previously was based in Scotland. I'll let them speak a little bit about themselves as well, if they want to. But we'll start with Pete, if you want to kick off, please.
Yeah, that's great. Welcome back, everybody. My name's Peter Brown. I work in Scottish Procurement. And it's always difficult when you mention the word procurement. Normally, everyone leaves the room. So I thought I would start with a light bit of entertainment and what happened on this great day in 1929. It was the second day of the Great Depression, and it was in... For those that know me, I normally don't need a microphone. Excuse me. So, indeed, Tuesday was the great day of the Depression, and we thought it would, in some way, give you a bit of historical context as to where we sit. Reality is this morning, Mr. Lockhead, Cabinet Secretary, introduced the concept of a Scottish material brokerage service. That is the reason I'm standing here today, is to give you a high-level overview of what the material brokerage service is there to achieve, and some of the outcomes that we're going to aim to deliver from it. This is the easy slide, really, the best way to describe this. The circular economy is the aspirational endpoint. What the brokerage service aims to deliver is the strategic management element. So what the brokerage is not involved in, or does not have an interest in, is the existing contract landscape for recycling, waste processing, current procurement techniques for trucks, bins, operational equipment. So we're sitting quite clearly up at the strategic management. What the brokerage wants to aim to deliver is consistency and continuity of supply of recyclable materials. That is what we're there to aim to deliver in order to enable, so it is really about an enablement function, to enable the ability to create market conditions for inward investment in whatever is needed, potentially infrastructure, to allow that to happen. And consistency and continuity of supply, we believe, is key to creating those market conditions. So really, we've developed this slide to give an idea of what the benefits potentially could be from the brokerage. Again, recognizing the brokerage as an enablement function. And it sits there, a Venn within a Venn, we've got here. But it gives some kind of an idea as to how it sits within the wider context and what it may aim to achieve. So it's looking, there's opportunity there for collaborating further. These are estimates, but estimating potential reduction of cost through collaboration. Again, potential savings through efficiency. Increased recycling rates, again, potentially it's got the case to enable the move towards higher recycling rates. GVA, potential creation of new jobs, new industry through that inward investment by creation of new market conditions to allow that to happen. And then, of course, there are the wider aspirations further out on the circular economy. What I was very keen to do today was not to lecture by PowerPoint, but to create some interesting debate to help us identify your views on the concept of the brokerage service. So I've not gone into much further detail on that. The last slide is really looking at, give you a flavor of how the brokerage could operate, how it sits. We thought the best way to describe this at this point was to say, regardless of what contract is out there, whether it's a merchant, a design build, long-term contract you're on, whatever the contracts currently are, they will be allowed to migrate onto a system that the National Waste Brokerage is acting as an agent. So again, the brokerage is not talking about in the collection space. It firmly sits in the disposal space and is likely, this is put out there into the audience, but is likely to be interested in the material at the point of the authority, the local, the public body boundary. So it's not within the boundary, it's at that point where it reaches the boundary. And then the aggregation process then takes place and presents it to market at a kind of national level. So that's the key concept. We have reached this point in time where we've had an announcement from the Cabinet Secretary, and as I says, really, what I'm interested in, what we're very keen today is to get into this very early debate and hear from yourselves as the audience. So these are my contact details. My colleague Graham Cook is sitting on the panel today as well. But without any more delay, I'll pass over to the next speaker who will do that, and then we can enter into some discussions. So hopefully that was helpful.
Slide back there. Brilliant. Well, I'm David Fraser, working at EY. We've been providing financial advice on actual procurements over the last few years in Scotland, where Pete's done the great job of talking about where we're going. I'm going to actually look a bit about where we've been in some of the problems which we've had, specifically looking at the residual waste sector, where we've been advising in a number of projects. So slightly the doom and gloom angle rather than the positive going forwards. Starting point for all of this, I think it's worth putting up the legislations, not even going all the way back into the history of this. 2010, you had the Zero Waste Plan, sets out all of the aspirations for what Scotland wants to do, where we're going with it. All sorts of great ideas and requirements in there, which then got translated into the actual legislation a couple of years later. And then this year we got the update from SEPA just on thermal treatment guidance. So again, constantly moving background of legislation which sits beside what we're doing in the waste sector. And there are challenges which go with that. Flipping onto that into a completely different area, and I think ties very nicely into the brokerage, is economies of scale. I think anyone who's worked in waste, it gets hammered into you time after time that economy of scale is one of the key ways to drive value from the process. This is a chart which I got from a bidder on a project where they were trying to justify their sort of pricing position to us and saying, well, actually the opportunities which you would have if you could get the economies and scale in are there. So really, really clear that once you manage to sort of get the tonnages you're working with for in this case, energy from waste plant up to a high enough level, you really drive the price per tonne, so the cost to the public sector just falls significantly on a per tonne basis. So fits really tightly with the brokerage concept of if you can get that joined up thinking, joined up approach to drive efficiencies or from scale, really good efficiency. On to investor issues in the sector. So actual waste forecasts in the market. So where we've got these incentives at the moment to try and drive through recycling, these targets over the future period. Where are we going to end up with those tonnage? So as an investor coming into the sector, you've got a real uncertainty there that you're being asked to build a plant at the moment, but the background of it is that everyone is looking to drive down the tonnages of end waste product over the time. So if you're coming into this sector looking to invest, do you realistically think if I build myself a 300,000 tonne plant now, I can get guaranteed contracts which are going to sit there for the life which I need for this project? So, absolutely an area where investors and funders focus. Planning is another potential huge stumbling block project. We've seen Scotland's generally been not hit too badly on this so far, but down south we've had a couple of projects which have fallen over in the sort of last year or two purely off the back of planning delays. And it's not ultimately that the planning's been rejected on these, it can just have been no decision has been made. So again, investors want to be able to understand that they have the likelihood of the planning being provided and what their contingencies and get-outs are in the event of a planning failure. Heat network plan on there is something which has come up kind of in the last year or so with some of our projects, where obviously on a thermal treatment plant you are generating electricity at the moment is the main byproduct which people are looking to utilise, but there's a requirement behind that to have an idea of what you will do with heat being generated. And it's a real sort of chicken and egg kind of area at the moment, because you can up front say, well, I've got all these wonderful plans to go and connect to any sort of heat network, off-take it here, there and everywhere. But if you're trying to sign a contract today, none of that exists. So you can't really connect it into your contract, but then you're being driven by background legislation to try and meld this into a future plan to work it into your planning. So there's a real disconnect there between what you absolutely have to tick off in order to get your project to work, to make the economics stack up, and this aspirational, in future, we want you to change this. It's a clash of heads there. The active one from the legislation changes is the pre-treatment requirement. So thermal treatment in Scotland had said we want you to strip out all of the plastics, all of the metals before you put this through an EFW plant. Then the SEPA guidance came out in, well, between January and sort of March of this year, it was being finalised. And that went, well, actually, if your curbside collections are good enough, you don't need to have this front-end pre-treatment. So you've suddenly had all of the procurements in Scotland, which have been running for the last sort of couple of years, thrown into this sudden change of requirements around them. So real difficulty there of how to proceed. And there's the massive danger attached to this of you've published an ODU, you've got a 2-3 year long procurement, and partway through it, suddenly you've got to do something differently. Do you suddenly breach your ODU? You've got to completely scrap the procurement and start over, or can you work around it? And as a bidder on the flip side, or an investor on the flip side of that, again, it's not a position you want to be, where you've sunk several million cost into the development of these projects to then have to throw it all away. So real challenges there. Collection regime changes, it's another area where investors are a little bit nervous around changes. So you're signing up to a long-term contract. What protection do you have against an authority's, in order to hit a recycling target, is now decided, right, we're going to curbside collect this material, which previously was going into an AFW facility. You've based all of your assumptions and forecasts around that. So a lot of contractual difficulties and investors looking for protections against that. And then finally, the one on there, the off-take market. So what materials are people actively able to sell? And it's all very well to say, well, there is a plastics market, but is it high-grade plastics, low-grade plastics? What can you strip out? How can you get the value into that material stream? There's no point in pulling out material from an EFW to say, yes, at some point in future you can sell this if it's dirty and of zero value, and actually you get greater value making electricity. So, all intertwined, as I say, with the legislation requirements that sit behind it, and there's direct conflict between the two. So those are sort of big areas that investors have sort of clashed with. Final one on here, which is kind of a specifics of waste projects, and banding structure. So bidders are wanting as high a guaranteed tonnage into their facilities as possible from a contract, directly in competition with authorities' desire not to be held to a binding level, because aspirationally you're trying to minimise your waste at source. So immediate conflict there, but without it, you've got real exposure as a funder, as an investor, to, well, what happens if these tonnages drop off? Our project's suddenly no longer financially viable. So driver on the GMT. You've then got banding prices above that, which typically, if you've covered off all of your infrastructure investment costs at your base level, you've then got a very marginally priced band above that. Well, that's sort of conflicts with the behaviour of you trying to incentivise the minimisation of waste, because if you're paying £200 on your first, say, 50,000 tonnes, and then £20 on your next 10,000, there's no real incentive to get rid of that sort of tonnage when the differential value of it is negligible. And then finally, the sort of upper bands is just the uncertainty of, well, actually, if the authority doesn't give me the tonnage, what can I go out and get in a marketplace in order to replace that? Which, again, all comes down to active market, and if you've got security of supply, again, brokerage concepts, that'll take away concerns there. So that's a sort of quick whistle-stop of the issues which we've encountered and had to deal with in actual live projects, and hopefully gives you a feel of some of the difficulties and challenges in getting to this point.
Thank you, David. Okay, we've heard from our two speakers. We also have two other people on the panel. Robin Baird, Waste Strategy Coordinator at Falkirk Council, and Graham Cook, also from Scottish Procurement. So I'd like to give Robin and Graham a chance to just introduce themselves and say what their interest or what their issues are in terms of thoughts of infrastructure, so that I suppose the people, before you ask questions, you know who to ask your question of. So, Robin.
Okay. Well, I think I'll start because I'm on the list. When you always start these things, you always say, "Hi, I'm Robin Baird and I have a problem." It always feels like you're some other meeting that I should go to on a Tuesday night. The purpose of this conference has been about change. We've heard linear to circular. We're talking about change. And this is really the brokerage, what we're trying to do. We're saying, let's change how we present and deliver materials to the market that better benefits Scotland and its citizens in Scotland. Not necessarily local authorities achieving extra value, but in terms of Scotland benefiting from increased infrastructure and security in an ever volatile marketplace that is a global economy. In terms of, I'm representing Falkirk Council, but I'm also, for my sins, the chair of the Waste Managers Network. And to show our commitment to that, we made this a priority work stream, working in conjunction with the Scottish Government some 2 years ago to look at this. And really what we ask for you today is, this is a development phase. We can develop this together as a group, as an audience. And that's really what this session is about starting to develop a fit-for-purpose brokerage service that can deliver for everyone, and not in a selfish way. It doesn't need to just deliver for local authorities, but it can also deliver for the wider marketplace, and it can deliver for whatever we need to do moving forward. So in terms of what we need to get out of this today is take that opportunity to help develop and curate what this should look like, and then put the onus on us to make sure it looks like that when it comes out.
Thank you. Graham?
Okay, so I'm Graham Cook. My interest is change as well, but change through public procurement and transformation of the way that public procurement operates. I've been doing this for 10 years now. I've delivered, or collectively, the procurement programme, but also me personally. We've delivered change and transformation in the way that the public sector buys all kinds of things. have changed the way that social care is purchased. We worked with IT and we lowered the European floor price for one of the largest PC manufacturers in Scotland. Biomass heating, we're supporting brand new investment and providing anchor demand for renewables right across the Scottish industry. Stomach bans for obesity treatment. So we've been involved in all of this stuff. Now, the reason I give you the long list there is to emphasise that procurement's role, Scottish procurement's role in this, isn't to try and become an expert in waste and materials management. It's to support collaboration. We've been doing it for a decade. And it's to support transformation of the way that the public sector views itself and its needs, but also crucially to drive change through the industries with which we engage. So we've done it in all sorts of areas. We are not, and we do not want to become experts in waste and materials management. It is absolutely going to be about engagement with the industry, both in terms of suppliers and in the public bodies themselves and the experts in CIWM, zero waste, and everywhere else where the stakeholders reside.
Okay, thank you very much. Well, that's us had two presentations talking about some of the issues and particularly about the announcement that a little bit more from Peter and the announcement from Mr. Lockhead earlier today, and also some of the barriers on the energy from waste side from David. So now I want to open up to the audience for questions. This is your opportunity to ask questions, and as we heard, there is a positive demand for that to help shape some of the thinking going forward. So, who's the first question? Graham. Is there a microphone? No.
Brokerage, great, welcome on board to that. As you know, I think I'd just like to give some views on I think one of the big challenges will be forecasting what's going to be coming as the nature of the waste, the content of what we're offering to market investors, a bit like a building, they'll come, you'll build the funds and you'll come, but it's what's in that and the forecast of where that's going as the nature of what we collect, of what remains residual, is still a bit in flux and is likely to be in the next few years. Are there any thoughts around that difficulty?
I'm happy to answer that, Graham, because I think it's a question we deal with every day in terms of what are we going to be dealing with tomorrow. I think the brokerage gives you more certainty on that. Individually, what we deal with will change 15-20%, which will have a significant impact, but the brokerage will have control of all waste, potentially, if it gets off the ground. So it has greater flexibility to absorb any changes in composition because it will be treating the totality of the waste. So for example, some of the questions that have been debated is we might have 500,000 tonnes of non-contracted residual waste treatment required right now, but in 2020 that might be down at 250,000 tonnes. But the brokerage then sets up one contract that fixes 250,000 tonnes as the guaranteed tonnage, and the other one is just a spot price onto the market. So taking in knowledge that waste will change, will decrease as it goes along, it has greater flexibility to do that and control that and absorb those fluctuations that it has a potential to.
Yeah, I'd just like to add to that is I think that's the key word is flexibility there, and what the brokerage will need to be is uniquely flexible to deal with one example of change, but there will be a myriad of other areas where similar forecasting will be difficult, but what the brokerage will need to do is be flexible to all of those.
Okay. Duncan.
Just following on from that, I guess the analogy I like bring is if you're competing to provide a service to a commercial or industrial or commercial business, there's a period of time where if they don't separate any material part of what you're offering as a resource business's solution, and a consultancy type of service with a payment or a charge, whatever the material is at the end, But in theory, once you've got to the point of you've solved the problem, you've then got cubed commodities. So you seem to have two parts. One is a buying a solution consultancy service, and the other part is how do I get the best value for the commodity that I've driven out. And it's interesting to know what the brokerage attitude would be. And the two separate issues that are joined up. But once it becomes a commodity issue, I see it being a big benefit because more choice, more visibility, more access for people to enter the market is no more difficult for the person who's receiving the value. The biased person.
Can I just ask, what do you mean by consultancy?
Very often a business might say to, I imagine a number of companies in here have had businesses where you go in, waste isn't separated, it's not in appropriate containers, it's sitting down one end of the yard, it's got the usual trick of a compactor closest to the back door. Someone will go in and normally offer a service to say, I can provide you with service because I'll make a 10% saving on the bill that you're paying at the moment. We tidy up what they've got, we teach them to look at what's coming in, what format it's in, you containerize it or you cube it. Once it's in cubes, it's a commodity service then, at which point you're trying to derive as much value from that material as you can to your margin and pass on a saving or a value to someone else. And that's the point that I feel it opens up that market and much more visible to the customer, which is surely.
Okay, all right. I mean, I would just add a comment to that. I think there isn't someone from Zero Waste Scotland sitting on the panel here, but obviously I would expect a lot of support for the local authorities and public bodies that want to join the brokerage in terms of getting them to the right place to make sure the materials can be collected and turned into cubes, as you say. Effectively, they're all commodities. So I would anticipate that would be part of the role of the brokerage. I don't know if anyone wants to comment on that.
Yeah, I would add. I agree with you. First of all, I think it allows, every person in that decision chain to make the right decision and how they're going to present that commodity to market. You'll be able to demonstrate what value you can achieve if you do X over Y. And if there's an extra benefit for doing X because that commodity can release that value, then I would like to think that a lot more intelligent decisions would be made all the way through the chain, which release that commodity value. And the consultation aspect has a role to play in that as well, to make sure that those decisions, you have full consequences of what those decisions are. We speak to our public every day, and what we try and get across is consequence of choice. But sometimes we forget to do that ourselves and understand what the consequence of the choices of the decisions we make in terms of how we collect, what does that do upstream. And I think the brokerage will help assist that by looking at the value and really releasing that value if you make the right choice.
Yeah, I certainly see at this point in time that one of the opportunities of the brokerage would be to open that information up and have that transparency. And by doing so, in real time, in the marketplace itself, that will show perhaps if material is presented in that way equals X, if it's presented that way equals Y.
I wonder if I could come in there as well. There's, through most of the arrangements we've looked at, through most of the transformation projects we've worked on, there are usually thought leaders, if you like, both in the public sector and the private sector, that help us demonstrate, the early adopters that say, this is the way you can do it. Now, my portfolio is worth £2.9 billion. We trade gas and electricity for the entire public sector in Scotland, literally the entire public sector. So we didn't get there overnight. We had a few early adopters in the public sector. By getting everybody to come together, we started to smooth out the peaks and troughs in demand for gas and electricity, which is, of course, one of the drivers of cost. We eventually got to a tipping point where it was so obvious to absolutely everyone, including, incidentally, the industry, that this was the only way forward, that we didn't even need to market what was going on. word of mouth took it right throughout the entire public sector. And now our contracts are actually used across the third sector as well. It's such a good deal that we're doing better than charities. And charities usually get a bloody good deal. But charities are coming on board onto our arrangements as well. So if you get it right, the sales job is easy. It sells itself. And I see no reason for the brokerage not to go down that same path.
Okay. I should actually, the first two questions, I should have asked you to say who you were. So apologies for that. I'll start now.
Eric Randall from Price and Recycling.
Thank you.
I sort of pick on a point that's already been touched on, and I think you use the analogy that you just recently used, which was being brokering out energy. Energy will come in as a very uniform product, but what you're going to have is this huge variety of different qualities from different sources, and you're going to be responsible for selling that on, being able to stand over the standard of that material to an industry which expects standard. So I'm just interested in how the detail of that will actually work through, in the way you'll interact with other brokers, how much enforcement you'll take. If you're a private sector broker, you've got to periodically inspect the materials. Another question I want to ask, which is kind of related to this, is will local authorities be required to enter into this? And would they be expected to take those standards in through their procurement process to third-party MRF operators?
Okay, so two questions there, Eric. Thank you. So I'll open it up. Does anyone want to answer either one of them?
Yeah, I mean, I'll start on both. And I'll use your electricity analogy if I don't mind. See, if you leave your light on today and I don't, do you pay more than I do? Yes, you will. So therefore, as a local authority, if you deliver high quality, you're going to achieve higher value out of the brokerage than you would do if you deliver lower quality out of the brokerage, because the brokerage will have to set out another quality. Multiple contracts. So you'll benefit for the quality you deliver to the marketplace. So the onus should be on local authorities to always achieve the best value for the communities they serve. So if there is a significant and proven higher value to deliver materials in a certain quality, local authorities will be naturally driven to make sure that they demonstrate the best value in the communities they serve to drive that value up. If you decide not to deliver a quality material, then the brokerage won't turn the door away, but you will pay a different price. Because the market, as you say, will have to do something else with that to get it up to an acceptable quality. So there's multiple contracts involved, and you were quite correct in the uniformity. In terms of local authorities being coerced into do it, no, in terms of having to come along to do it, sorry, rather than putting words, I would think that this is a proof of concept. If the concept, we've established in the energy contracts that the proof of concept has been there, that value and savings can be achieved if you join. The brokerage is no different. We have to sell it to our members that sign up to that. So if a local authority comes to us asking, as my local authority will do, what is the benefit for my locality if I sign up to this? The brokerage's responsibility is to prove the concept, to prove the value exists if a local authority comes to the table with their material. But that value will be very dependent on the quality. And that value might be 2 or 3 levels of value in terms of what you get. But the key process of the brokerage would be to drive that argument up the agenda, because the higher value will be quite clear in where that value sits. And so that's where I see it being developed from. Does that make any sense, or did I give a right politician's answer?
No, I understand. I would refer to the challenge back to you.
Of course you can.
At the lower end of the quality spectrum, you're going to be dealing with materials which industry is very, you say, imaginative in how it actually finds back routes through whatever countries to Indonesia, to wherever, where it's hand sorted and so on, in order to get it back into mills in China. There's all sorts of games which go on in order to make that low value material leave the UK, because actually there's a very, very limited market for that low material within the UK. So are you going to take on the risk of accepting and handling that material, and having to be very imaginative in how you find those as a government-sponsored body, and also potentially rub up against CEPA will be looking at the quality of this and taking you to court for shipping low standard materials out.
Well, I don't think any local authority ships low quality. I think the brokerage gets, in terms of looking at it in terms of local authority point, we deal with suppliers who deal with that. The gate fees for MRFs are going higher and higher because of the quality protocols being put in places. The quality agenda is going as its highest on the agenda than I've ever seen it in my local authority. But you have to understand that local authorities will have a cost if they want to continue to deliver low quality material, and that will simply happen. You say you look at people at £35-40 a tonne now being quoted as a processing fee for commingled recyclate in some cases. So in terms of the brokerage, you have a business case. Local authorities need to do a business case. My business case, I collect commingled material. It costs me £40 a tonne to process it, to get it up to an acceptable quality. Or I collect paper separately, I collect X separately, and I can turn that into a £300,000 income. So it's very much a business case, and local authorities aren't any different in how they handle that and treat the business case. It's how we regulate that as a brokerage. I mean, for example, to throw something back out to the audience, who's saying the contracts that exist now are the second generation waste contracts? What, for example, if you put a service only contract out there and you say to the market, all I want you to do is process it for me to a standard that we accept. So therefore the material value is retained by the brokerage or the local authority and they take it through the stream. So I think we're looking at dating back, I think we were too busy looking at first generation waste contracts. It took us to a point. I think the brokerage is really about looking forward and looking at the second generation contracts and what do they look like, and what do they look like in a circular economy, zero waste environment in which we're delivering in. And that's the commitment I think we all have to make moving forward.
Okay, can I ask Graham or Pete to talk about that?
Sure. So on initially the procurement and potentially mandating contracts, we've delivered procurement reform in Scottish public sector without mandating central contracts, and we're achieving 99% plus compliance to the agreement. So there has been no need to mandate anything. We have had strong support from various different ministers across the 10 years, most of whom have said, I don't want to have to mandate these contracts, but I will if I have to. Now, I don't want to put words in any minister's mouth. That has been said, and certainly the ethos still stands. I don't expect we would have to mandate. To come back to the quality question, I do think the answer to that is looking at the fundamentals of the way in which we engage the supply market. Behaviour of suppliers is driven by, in any market, the costs and the price they can get. And their costs and the price they can get are related to exactly how they sell what they do. We have an industry that takes ownership of materials which are often subject to market shocks, I would say, rather than, I don't think they're volatile in the same way that gas is volatile, but certainly subject to market shocks. And they therefore have to behave and price in such a way that manages the risk of those market shocks. Perhaps a better way, and one way that we might consider through the brokerage project, is to put the risk of the market shock back into the public sector in one way or another, but also the incentive of providing better quality material far closer into the hands of the public bodies themselves. And so it's using commercial drivers to change behaviour. There's obviously a legislation and policy behind that as well. But I think we can get to what we require by changing these things slowly. And if I could just finally address electricity as standard, you plug something into the wall and it works. Doesn't matter who you're buying it from. Doesn't really matter in terms of your equipment working, if it's green or not, and so on. You're absolutely right. But we've done the same thing in social care, which is local authorities It's extremely complicated. It's extremely sensitive. We've driven through collaborative arrangements that initially our target was 75% buy-in, 75% of the expenditure rather than 75% of councils. These hit, well, they're now well over 90% 4 years into the contracts. So we can do it in complex areas, and we can do it to well over 90% compliance without mandate.
Okay. Another question. Would you like to introduce yourself, Graham?
I'm a little bit alarmed at the idea of transferring all of the risk of market shock to local authorities, because the party I don't see at the moment around the table with the brokerage are producers. And we got well stuffed in 2008 with the market shock, doing the right thing, collecting the recycler, and then the brokerage goes because of pricing.
Yeah.
Do you see the brokerage having any influence and leverage on PRNs or getting producers around the table to take responsibility to lessen that shock and the money that's leading from the public person forward?
Well, can I ask Graham to answer that question first, since he mentioned the risk issue?
Well, thank you. Yeah, just before we get into the PRNs and so on, I think I should clarify what I mean by transferring the risk of the market shock. What I mean is transferring the ability to manage market shocks into the public sector. So we heard about the energy recovery project. If we are dealing with a company who itself is having to pass on material rather than use it itself, that's when the market shock comes right back in and hits. If, however, you can package the materials in volumes and in contracts of sufficient longevity that we can get, the receiver of those materials can then get, for example, go to the Green Investment Bank and get some money. You then start to drive in a sustainability, both of price and feedstock, if you like, into these major investments such as the chimneys. Now I see that not just operating in the energy recovery, but also, for example, reprocessing of plastic bottles, as was mentioned this morning. There is potential for Scotland to have a major remanufacturer of plastic bottles. Now, if we can capture Scotland's plastic bottles, offer, say, a contract that starts in 4 years' time that will guarantee a volume of particular quality of bottles for maybe 10 years, that will allow someone to invest in Scotland, to build in Scotland, to build those jobs in Scotland. And by the time the councils then start putting the material through that contract, the thing's up and running, the capital, the buildings are there, the jobs are there. And therefore you're protected from the market shock because you've got someone who wants your bottles and they're contracted into using it themselves. So you suddenly change the game because you're not dealing with someone who is incapable of storing it, who's incapable of selling it, because they're not selling bales, they're actually selling plastic bottles to drinks manufacturers. So that's part of the picture there. And so I could pass on to someone else in the panel to talk about the PRNs.
Anyone want to raise the issue of PRNs?
I'll take that, given that we're 5 minutes over and we'll have to close in about 20 words' time. So, PRNs and PERNs are very much need exploring. There will be a role to play. The brokerage will have to interact in that space, but it is too early to say how we will interact in that space. We do not know yet.
Okay. Duncan, would you like to introduce yourself first? Yeah.
producers pay for the PRM system for those market shocks as well. And there was a market shock on glass in the last 2.5 years. My main observation of that was the price rose unannounced very steeply for producers who coughed up and paid the bill. And that kept the glass moving and it kept the price going. What shocked me was how long it took people who were owners of glass to see the glass price move. And I guess if you saw two things side by side visibly, much more quickly, with all of the information about forecasts round about it and what might happen, then you know to try to access the better value when it's there. Turning up 6 months after the event and saying, why didn't I get any of that money?
Okay. All right. Any other questions?
No, there's one.
Oh, gentlemen, would you like to introduce yourself?
John Quinn, CLOL, R21. Sorry, I missed the start of the presentation. I don't know, I spent the time on it. There was a presentation about our problems with DFW plants, residual waste, clear pay principles, long tender, lateral flexibility, all the sort of arguments for our before. But I'm just wondering, as we move up the value chain on the council, these sectors, sort of the converse of that is lower value residual waste. I'm just wondering, is there a proposal in this all this story for dealing with residual waste or negative value and really you can see all sorts of implications in terms of regional infrastructure and beyond that is the case. But it's an interesting concept. I know it's
No, that's okay. We actually have to 1:45, so Pete's way ahead of us. So
I'll quickly touch on what the brokerage, as we currently sit, is keen to explore there. We're likely to kick off on 4 work streams. First work stream is about looking at what the brokerage will actually, how it will operate, the detail on all these issues. The other work streams related to which waste streams that the brokerage will look at managing over time. One of them is source separated materials, the other is DMR, and the other one is residual. The plan is very much to run these work streams parallel, with no priority given to either one nor all, though there is clear complexity across different work streams. So we may get to a first stage quicker in some work streams than others due to the complexity, but that is, as we currently sit, how we see the programme.
I guess that really takes the issue of collective development of infrastructure at so regional level of the retail level. It's really not going to work. All the ways to food, whether it be high value recycled or low value residual, it's regionally food and applied to a market or a state through that.
We shouldn't necessarily think of physical aggregation of the material. We wouldn't want to rule anything in or out. The brokerage is right now it's incredibly flexible concept because we haven't conducted the consultations yet. So we don't want to tie ourselves into any particular model, be that physical aggregation or virtual aggregation selling. You could conceivably, someone could drive around all 32 local authorities and pick up the material that they'd bought through the brokerage. Now, logistically, that might not be the best thing to do, but we wouldn't want to take that possibility off the table at this point. So it may result in a more central approach to infrastructure, but not necessarily.
The other thing I would say on that is that I know there's a focus on municipal waste, but the other big issue is getting commercial industrial waste. And at some stage we're in the process, I guess that should be it.
I'll pick that one again, is yes, on the longer term, the long-term vision is very much to focus on formerly known as municipal waste, then to wider public sector, and then potentially into the commercial industrial space.
okay, I'm just. Oh, Sorry. Go ahead.
Question about oversight.
Sorry, could you just say who you are?
Charles Newman from Resource Media.
Hi.
At the sharp end, there's clearly some deal making that's been done with buyers, material. What kind of oversight is there in terms of ensuring that there's fairness in the way that these deals are going to be done, etc.? You've got to kind of factor that in.
Yeah, okay. I suppose that's really about governance, a governance issue. Graham, do you want to mention?
It's governance, but there's also a raft of legislation in place. So that there's pure procurement legislation, which is about things we buy. There's also legislation in place about things we sell. And we still have to be able to demonstrate best value. Now, no deals have been done. We've had some, very brief discussions right across industries. But no deals have been done. Things will have to be advertised and done in a transparent and open way. So the oversight will absolutely come from governance, but it will also come through trading these contracts, be they, here's a couple of ales, or here's a 10-year contract for 30% of Scotland's volume. All of these things will be put into a competitive space where providers will bid. Something I'm keen to look at and explore is effectively selling futures in it, in order that someone can, as I say, go to the Green Investment Bank with their contract that in 3, 4, 5 years' time, they will have 30% of Scotland's bottles. So that's something I'm keen to explore. But no deals have been done with anyone, even the councils. The Scottish Government has no deal with the councils. What we're doing just now is opening the discussions with all stakeholders in this space.
Okay, I'm conscious of time now. We are close to time. I'm also very conscious that we haven't had yet a question aimed at investment for David. So I'm going to ask, would someone like to ask any particular question that's investment related? Because at the moment all we've talked about is the brokerage. Yes. Amanda, could you just speak up a little bit? You're quite bad.
I've got a myriad of questions about challenges, but particularly in relation to investment, CTUK and the potential investor in Scotland in terms of infrastructure. I'm not getting more feelers from what you're talking about and encouragement to do that. I'm concerned about how this could cross the Scotland Excel framework, sort of like that we do today. I was interested in David's view on how the investors and the investors in the bank will view this going forward.
Yeah, okay.
Predict the value of material in 4 years' time.
Okay.
Yeah, absolutely. I mean, the Excel framework is a relatively short-term contract that's in place at the moment. So whilst there is a bit of an overlap in timing, I suspect the brokerage, the actual benefit of it comes from you're getting a much greater certainty of supply, you should have supply of a given quality. So my feel is that the actual longer term benefit of that is that the much greater confidence the market can take that there will actually be the material there in the quantities and form which is needed, that investing in a plant to work with the product actually makes sense at that stage. So from the sort of bank funder side of things, that's every single time you come into a contract, one of the key things they want to know is, right, what are we guaranteeing our money against? We need to know that certainty is there, or there's just not the incentive. There's the risk has to be offset on something. So I think the brokerage contract allows you to bring that certainty of, because of the ability to pull from so many different places, the material will exist in the form needed. So that would be the plus to it, I think.
Graham, you just wanted on?
I'd just like to add as well that the brokerage and the Scotland Excel and the local, a lot of the councils have their own deals out with Scotland Excel. The brokerage and those contracts are not mutually exclusive. Certainly within the Scotland Excel contracts, there's a clause there that allows local authorities to maintain ownership of the material. There's a good reason that's in there. It was to future-proof everything for the brokerage. So I actually see contracts such as the Scotland Excel ones as an essential part of this picture. And if you remember Pete's slide with the arrow and the different stages moving to the aspiration of circular economy, the lower part of that arrow is where you should consider the Scotland Excel contracts. And as I say, they are part of the picture, part of the ongoing picture. They're not mutually exclusive.
Okay. I'm sorry, we are out of time now. I'm supposed to do a 5-minute summary, but to be honest, I think we've had a really good debate on the issues, and I think all I would say is really that I think that Pete and some of the questions there that we've had on the brokerage really have highlighted the fact that it's an enabler, and there's a lot of things to the detail to develop from the launch date in January. And then we've had David mentioning a lot of the investment issues, and it seems like some of the brokerage work will actually aid some of those barriers that we currently have on investment, particularly on energy from waste. So it's been a good mix and linked together. And thank you for all your questions. So I think really good debate, and I'm sure there'll be more information on this subject coming out in the next couple of months as more information is consulted on. So I think we'll stop there, and I'd just like you to thank our speakers in the time-honoured manner, if you don't mind.
To very quickly add that if anyone wants to discuss, Graham and myself will be staying around, so please come and speak to us afterwards. Thank you.